So you just spoke here at the Asia Global Dialogue, making sense of global disorder. How do you make sense of it? And what disorder? Things seem to be going all right now.
Yeah, I mean, if you're a skeptic about the turbulence and populism and so on we see, you could look at the global economy and markets and say things are going well. We have a synchronized growth acceleration pretty much globally. Markets are at all-time highs. They're showing low volatility, relatively little nervousness, reasonably calm reaction to the withdrawal of monetary stimulus and so on. So it looks like we're in much better shape than we were 10 years ago. So the question is, what disorder? And I think the answer has to do with the rising tide of political and social polarization, especially in the West. The rejection of anti-establishment, the rejection of establishment parties, elites, the governing structure. And this, I think, is at least in part a function of adverse distributional characteristics of growth patterns.
Which leads to protectionism and some of the things we've seen.
It can lead to all kinds of policy mistakes. When you have a rejection of the system, it doesn't mean you get something better. Coming out the other end, you can get political paralysis, instability, poor policy choices, and so on. So rejection of globalization is certainly...
So what kind of dialogue do you want to get going along with your fellow Nobel laureate, Joseph Stiglitz, and other economists? You've set up this commission on global economic transformation. You want to get a dialogue with global leaders about what?
About what the realistic options are for shifting the growth patterns in a direction that improves the sort of inclusive dimensions of them, deals with difficult transitions to, new kinds of jobs, difficult transitions to reskilling and shifting the human capital mix, and the sustainability issues. A part of it is also going to focus on the financial side of the global economy. I mean, there are issues having to do with volatility and stability and so on that probably need to be addressed as well.
Now, while you were speaking here back in New York at your university, at the Stern School, we heard from Janet Yellen. Of course, she will be the outgoing Fed governor. So how do you see this transition going?
I think the best guess, and it's not just me, is that this is an issue of continuity. I think that her successor has shown every evidence of being, judicious, pragmatic, and so on, and has supported her and her colleagues in the gradual withdrawal of stimulus. So I think, on the central bank side, you had superb performance around the time of the crisis. Then you had an excellent run under Ben Bernanke, another excellent run under Yellen, and I just think it'll continue. I think central banks have been a pillar of strength.
Will stubbornly low inflation continue?
Yes, I think the deflationary forces are pretty powerful in our economies. I don't mean serious deflation in the sense of falling prices and rising real interest rates, but there just isn't much evidence of real inflationary pressure, even when unemployment rates, drop to what used to be viewed as kind of the level at which you'll start to get inflation. We're just not seeing it. And it's very broad. I mean, we're not seeing it in Europe. We don't have much indexing left in our economies. People say at some point you've got to have a market response if you're running short of supply side capacity, but we just haven't seen it yet. So there may be hidden elements of capacity in the global economy that are just lurking around, ready to supply demand.
How do you see coordination among central banks continuing into 2018? Because, of course, Jerome Powell will be the new Fed chairman. We will potentially have a new governor at the Bank of Japan, even though Kuroda could continue on. Yep. But Zhou Xiaochuan, very likely in Beijing at 69 years of age, very likely to be replaced at the National People's Congress in March.
Well, the central bankers, do coordinate with each other now. They meet and in Switzerland at the Bank for International Settlements. They talk to each other. They don't coordinate in the sense of their mandates don't allow them to formally or make arrangements with other central banks, but on an informal basis, I think they keep themselves pretty well informed. These are big changes. I mean, we've had, giants heading these institutions. Ben, Janet, Zhou Xiaochuan has had an extraordinary run as the head of the People's Bank of China. But I think on balance, the best way to think about this is there's a younger generation of very talented, very well-trained, experienced people who are likely to take over.
What's the biggest risk they are going to face in 2018?
I think the biggest risk would be an outbreak of sort of volatility somewhere in the global financial system, the global monetary system. I don't think it's a very high risk, but you can't dismiss it completely.
So let's talk about China. Debt was a big focus at the 19th Party Congress. Are they making this priority now to tackle the debt? How much of a priority is this, given the IMF projections and other projections that the percentage of GDP is going to continue to pile up?
Well, it's pretty important. I mean, there's been a run-up, an enormous run-up of debt. I think, the gross debt now figure is in the neighborhood of 270% of GDP. That's consistent. That's broadly, the level you'll find in a wide range of countries, both developed and developing. But the trajectory can't go on like this without incurring serious systemic kind of risk. So I think the commitment to getting it under control in terms of the rate of increase, I don't mean they're going to cut it right away, but get control of the rate of increase and accept, if they have to, some impact on growth in the short to medium run. I mean, there's no guarantee that the consumption kind of middle class growth engines will kick in fast enough to replace generating demand, using credit. So, but I think they're pretty committed.
Now, Zhou Xiaochuan, the PBOC governor, has warned about the possibility of a Minsky moment where you have a sudden drop in asset prices after a long run of growth. Is this a possibility, or do they have a firm hand on the tiller?
It is a possibility, but there's also a great deal of competence in the central bank and in the policy-making, structures generally, and they have a fair amount of weapons to counter this. It's not easy, because if they intervene too much in financial markets, they'll sort of, extend and exacerbate this sort of moral hazard problem. That whenever we get into trouble, the government can fix it. You don't have to worry too much about risk, which leads to misallocation of resources and mispricing of risk in the financial system. So it's not an easy transition, but you can't reject the possibility that you'd have a major asset price reset. In
your estimation, where would the tipping point come? From the municipal level at the LGFVs, the local government finance vehicles, with the state-owned enterprises? Household debt is rising, but it's still fairly low. Property sector? Property sector and or some kind of mismanagement in the SOE sector. I mean, I think that's where the big run-up in credit has been basically in the corporate sector, and when you look inside the corporate sector, because it's divided between these two sides, private and SOE, it's the SOEs, and the problem isn't just debt. It's that debt was taken on to build assets that are worth less than the cost of creating them. That's the definition of negative returns. They know all this, and I think they have the resources to deal with it, but it wouldn't take a big mistake, to have some kind of fairly violent, sort of convulsion. On the trade front, of course, I just followed around Donald Trump around Asia, and he was talking about lowering the goods deficits that the United States has with its major trading partners, $69 billion with Japan, $27.5 billion with South Korea, $360 billion plus with China. Yeah. Did you see any deliverables on that front? No. At least, I wasn't able to detect much of anything. There's some business deals that were signed that, might make a difference, but I think the heavy lifting is going to have to be done in the United States. And I hope, although there's parts of economics that have oversold globalization, the notion that you have to have a balanced pattern of trade with every major country in the world or major economy is just silly, right? Nobody does that, right? So
So I think the hope is that people start paying attention to job creation, to competitiveness on the tradable side, and to the overall, deficit, but not these bilateral ones.